You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is a little bit past noon central now. It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Hope you're having a good, truncated holiday trading week. A lot going on, a lot to get to. Remember, if you like what you hear, this show, anything else on the network, throw a like, a star, a comment. It all helps get mixed in to the algorithm that recommends it to new people, and they are legion out there all the time. Then, of course, if you want to go above and beyond, you want to come back after Vol Views to keep the party going with a little bit of options oddities, and who can blame you? Only one place to go to get that, theoptionsinsider.com/pro. That'll get you past the bouncer. You can hang out with us for the ever fun, everlasting party that is the pro. Check it out. It's a fun time, if I do say so myself. Got a fun time in store for you on the show today as well. A lot of fun people joining us. Let's go out first to the hinterlands of Chicago once again, where we are joined once again by the once future and now present Dr. VSTOXX. He also moonlights as Dr. VIX, does a little bit of both. Mr. Russell Rhoads now hanging his hat over there at the Kelley School of Business, where he is corrupting new minds for future generations to come. Mr. Dr. VSTOXX, welcome back to the show, sir.
It's always very happy to be here. I'm gonna make you talk about VSTOXX, or I'm sorry, UVIX a little bit later. We got to make sure we got time at the end, because I'm very excited to talk about it.
All right, we will get there. And also joining us, I'm not sure if he's excited about UVIX. I guess we'll find out. From the Southern Volatility Mecca known as Austin, we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. To you as well, sir.
Hey, good to see you, Mark. I'm happy to be here. Happy Friday.
Are you seeing me? Do you have that bug planted, that camera in my studio again, sir?
I do. I do.
I felt your eyes watching me as the show started. I thought so. And then also joining us this week, holding down the Eurex hot seat, he is a first-timer on the program and indeed on the network. He is Mike Green, the Chief Strategist and Portfolio Manager at Simplify Asset Management. Mike, welcome to the Volatility Views program.
Oh, it's great to be here. I'm just glad I'm not a greasy meatball or anything like that.
It'll come with time.
Just give him a chance.
Yes.
Just say something silly and he'll get you.
Yeah, there we go.
In fairness, you did nickname yourself Mr. Meatball, so that is fully on you.
That is true.
That is upon you. Well, Mike, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the vol space, as well as what it is you folks do and indeed trade at Simplify Asset Management.
Sure. So I'm the Chief Strategist and Portfolio Manager at Simplify Asset Management. We're an ETF startup that was launched in 2020 in response to a regulatory change that facilitated the inclusion of derivatives and derivative type strategies inside ETFs. This has been one of the key drivers of the proliferation of ETFs and interesting beta exposures that you've seen within the United States over the past several years. Prior to that, I was the portfolio manager for Peter Thiel in his family office, managing, in particular, the focus on derivative strategies. And the trade that I'm known for in the space is the blow up of the XIV, where I had positioned Peter with about $250 million put against a product called the XIV, or really more accurately, the SVIXY, anticipating the volatility blow up that occurred in February 5th, 2018, that we call Volmageddon. Prior to working for Peter, I ran my own fund that had been seeded by Soros and was also the head of the New York office for a firm called Canyon Partners, which is a major multi-strat, I think $25 billion in assets under management. And I did that for an extended period of time before that, introducing macro strategies, running a lot of derivative strategies, et cetera.
All right. Well, we've got the invocation of the much bemoaned, much shaded XIV. We've got Russell talking about UVIX. I think we'll have to definitely make sure we squeeze in some time for a little bit of the vol ETPs. But first, we have to kick things off in the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is lighting up the tape here to end our truncated holiday trading week. And it's been a topsy-turvy one. That middle of the week holiday, kind of weird, kind of threw off my schedule for the rest of the week. I was like, wait, what day is it? So yeah, kind of a weird little truncated. We're used to the Friday. We're used to the Monday, obviously. Midweek, not so much. So that's kind of taking some getting used to. And the markets seem like they're getting used to it as well. Very topsy-turvy, very crazy one again this week. All of that leading into, it seems like a quiet whimper to end the week. Most of the major indices, they were slightly red. It seemed like the Dow has managed to tick unched to slightly green right now, but about not even 0.05%. So not a heck of a lot going on there. Not a heck of a lot going on really anywhere, at least net movement-wise right now. S&P off about 0.1%. NASDAQ red, slightly red to unched. And we've got our old pal small caps, which again, if you want a deeper dive into small caps and recon, check out my chat with the folks from FTSE Russell yesterday on Twifo. Pretty fascinating stuff. It's that time of year, listeners. Small cap taking the driver's seat out there. S&P, or I should say small caps, up about 0.2% out there right now. So a whole heck of a lot of nothing. We had VIX getting a little bit of an inhale earlier in the session, now giving most of that back to about a 13 even in the VIX cash right now. That still puts it up about half a point from where it was this time last week, about 0.45. But other than that, not a heck of a lot going on. VVIX unched from where it was this time last week at about an 84. So keeping that same level on the tape. I do have to touch on one of the big developments of the week. We were obviously talking about it as it was unfolding yesterday, was just I guess the technical term is explosion of paper that we saw out there in NVIDIA. We've been saying for a while, this shift, this split might be a sea change, might be a paradigm shift in terms of options volume. We might have a new king in town going forward, and that does appear to be the case. NVIDIA blowing the doors off anything else that had come before. The next closest busiest day was actually set by NVIDIA about exactly a week ago, 7.9 million contracts. Of course, all that split madness going on then. Yesterday, we were talking about it as it was happening on the option block. I was speculating north of 10. Flowmaster thought it would be 11.6. Ended up coming in about a million shy of that, 10.6, but still the most explosive single volume day for any name ever in terms of single lists. I mean, just ridiculous paper. Just not even in the conversation as anything else, really. So NVIDIA, just another one. If you're not following the Flowmaster on some of his outlets, you should check him out. He has all the data he's been putting out there as well. But again, fascinating stuff, and all of that being mixed into the very tasty volatility stew that is unfolding today here as we speak on the show. Let's go out to the Eurex hot seat. Mike, as our guest, you get pride of place, sir. Obviously, an interesting week, a truncated holiday week, and some weird outliers going off like NVIDIA yesterday as well. What was catching your eye this week from a vol perspective?
Well, I mean, the overwhelming story in the vol space is just the incredibly low correlation, which is a byproduct of the demand for call options on NVIDIA. If you think about index correlation, it has two fathers. One is or index volatility, I'm sorry. It has two fathers. One is the level of volatility of the individual stocks and behavior, the realized volatility itself. And the second can actually be perversely the weights and the dispersion of weights within the index. In this case, we've got a few number of stocks that now make up such a large fraction of the index that they kind of mechanically force the correlation levels much lower than I think is appropriate. We're seeing divergences that are really quite interesting. Whether this is just another March correction leading to a relatively modest drawdown, or whether this is something more important in terms of the NVIDIA dynamics and the VIX itself, it's hard to know yet. Right? All corrections start small.
You mentioned the D word, dispersion, a very hot topic these days for the reasons you just laid out. We've been saying for a while now in this market, yes, a Magnificent 7, maybe even a Magnificent 5, maybe Magnificent 1. It's just NVIDIA carrying everything else on its back. However you look at it, it is only a handful of names really driving this big move, getting narrower in terms of breadth, it seems like every week these days. So we're kind of living in some rarefied air these days. Obviously, that makes that dispersion trade a lot more fascinating. Is that a big area of interest for you folks? You sling a lot of dispersion over there at Simplify, sir?
Well, we don't actually sling a lot of dispersion, right? So typically dispersion is traded in a relatively high frequency manner, and it tends to be paired up against variance trades more than anything else. We've considered doing it. It feels like the trade is extremely crowded at this point. The much bigger concern becomes, when you have correlation this low, there's two vehicles that can cause an overall spike in volatility that tends to be negative for market positioning. One is an event that causes an increase in correlation, and the second is an actual external event that causes people to, change their assessment in any way, shape, or form. When you have a company the size of NVIDIA and the contribution that it's making to both the absolute volatility in the index and the dispersion trade, it kind of feels like the bears are waiting for that ammunition to finally be there if NVIDIA ever starts to correct, right? But that seems to be what's holding up a lot of the trading activity that we're seeing, in particular short volatility strategies, et cetera. Have just gotten extraordinary tailwinds. Oops, dogs went crazy there.
Your dog's like a little bit of dispersion, it sounds like, as well.
Yeah, that's right. That's the dispersion on the day.
They're piling into that crowded trade. Why not? There's room for everybody out there. But you're right. NVIDIA does seem to be the driver out there these days. All it took was a swing from about a plus 3% to about a minus 3% yesterday to set off this whirlwind of volume out there today. I haven't run the numbers yet for today, but we are off about 2.5% right now in NVIDIA as well. And as everyone has pontificated for a while now, whither goes NVIDIA, so goes the market out there. So yeah, we said maybe after the earnings, we thought maybe that was going to be the blow off top. Obviously they had more room to run, but who knows? Is this the top everyone's been waiting for? Yet another inhale before the next leg up? We've been saying a top in NVIDIA for a while, and if you've been betting on that, you've been run over if you've been aggressively short out there. Let's go out to the Southern Volatility Mecca. Mr. Meatball, sir, we were talking about this on the option block yesterday. Obviously, NVIDIA just blown away everything else. You have referred to it in the past as a vampire that sucks in all volume and indeed some volatility from other names into its own orbit. But a crazy day out there yesterday and an interesting week. What caught your eye out there this week?
Yeah, NVIDIA had a absolute wild day on Thursday, $11 range. Now that's $130 stock. That is almost 10% of the value of the stock up and down by throughout the day. That's kind of nuts. We're seeing Apple move around a lot. We're starting to see some creakiness in some of these names. AVGO, which is now the fourth largest company in the world, has been up and down. We've got the big XLK rebalance after the bell that I think is kind of goosing things one way or the other. And the other thing I noted is just how stretched the S&P 500 has gotten over equal weight, over the Dow Jones, over what are now turning into more broad market ETFs. And that I think is kind of fascinating. How far can they stretch that? And when it unstretches, which it very will, is it from the S&P falling faster, or is it the two of them coming together? Or does the diamonds go on a rip-roaring rally? I think we have yet to find out the answer to any of that.
We have yet indeed. I did find out the answer, though, how much paper NVIDIA has put up right now. And it is another banger day. This time yesterday, maybe a little bit later, around 12:30, I think we were at 7.33 million contracts. We're closing in on that again, 6.5 million contracts right now. So give us another 10 minutes. We could easily be at 7.3 million. So are we in store for another just explosive volume day out there? What does this mean for everything else? Are you in on that very heavily crowded dispersion trade at the moment, listeners? A lot of folks are out there. A lot to unpack out here. Let's go out now to the once and future Dr. VSTOXX. Sir, obviously a crazy week, a truncated holiday week, a lot going on. What's catching your eye out there this week, sir?
I'm just about to hit the button and buy 500,000 NVIDIA calls just to help out with the volume.
Do what you got to do.
So yeah, do what I got to do to help it to make it sound really big. That 6-7 million in a single stock just blows me away. For those of us that have been around for some time, a little something that I'm picking up on. What's kind of interesting is July is now our front month, and as of when I checked about 5 minutes ago, the July, even though VIX is up by about 40 cents or so on a week-over-week basis, the July contract's flat. So nobody's worried about anything. Everything's fine. I'm Kevin Bacon in Animal House. Nothing to see here. Remain calm. It's all good.
I'd rather be Kevin Bacon in Quicksilver walking onto the Pecos with a visitor's badge on earnings day and slinging size. I want to be that guy.
And riding his bike around.
Yes, riding his bike.
No, it's just a whole tunnel of complacency. When we get to the weekly trades, there were a few kind of interesting weekly trades, but I feel like NVIDIA doesn't have a whole lot to do with VIX. And if everybody's focusing in on NVIDIA, then maybe people are not looking at the broad indexes in the same way or with as much or paying as much attention. But that narrowing of the spread with several weeks to go before July expiration kind of caught my eye.
Yeah, a lot to unpack. Let's keep rolling here, listeners, and see how much more we could squeeze in. Let's go out to the land of the volatility surface. Surprise, surprise, was heading into the start of the show. Maybe if I re-racked it right now, it might be exactly flat. It was kind of up to down, slightly kind of mixed there in the front portion. June obviously rolling off the board. You pointed it out on the show last week. Kind of an aberrant expiration cycle this week, so watch out for that. No Wednesday like you're used to, popping off on Tuesday instead. So that also kind of gumming up the works a little bit this week. Now we have July in that pole position. It was down about 1/10 of a point. As we're kicking off the show, August up about 1/10 of a point. Not a heck of a lot going on in that front portion of the future. Seems like we are having, at least on the vol surface front, a quiet slide into the weekend. We'll see. Obviously, anything could pop off in the second half of the session. Looking right now, everyone's obviously fixated on that AUK future. It's hanging out right about an 1860 out there right now, which is pretty much exactly in line where if you go all the way out to February of next year, also at an 1860. So Feb of 25 and October of this year trading at the same level. Kind of interesting levels out there. We've debated for a while whether that AUK pop is merited or not. We won't go into that again. Instead, we'll just go out to our guest. Mike, sir, obviously all eyes these days are also on the volatility surface. What is catching your eye out there this week?
Well, I mean, obviously everybody is focused on that pop in October, right? That contract does cover the election. I think that's certainly valid. But I think the much bigger story, and actually I should have mentioned this as part of my bio, part of the team that puts out the Tier 1 Alpha report on kind of the short-dated option surface, et cetera, we're just not really seeing the demand for hedging happening anywhere outside of the front week, basically, right? So everybody is increasingly using 0 data expiry or 1 data expiry options to hedge the actual event as compared to paying for 30 days or, heaven forbid, 60 days worth of volatility. The CBOE tries to push pretty hard against this narrative, but we've unquestionably seen a marked decrease in both the quantity of capital and the volume of capital that is being used or the velocity of capital is being used for hedging anywhere beyond kind of the 1 week point. And so I'm just not sure we get the same information content that we used to as we look further out the curve.
Speaking of information content, while you were talking, I happened, just for historical purposes, I just pulled up some historical data from SIBO to see what kind of numbers they were putting up on the total exchange heading into the pandemic. And as of late 2019, the entire exchange volume, 4.4 million contracts going up in the entirety of the SIBO, listeners. Now, NVIDIA yesterday, 10.6. That puts that into a little more frame of reference for you, a little bit more context there. You're talking over 2x all of the SIBO's volume from as recently as 2019, just yesterday in NVIDIA. That shows you how aberrant and somewhat unprecedented that number was. Mr. Dr. VSTOXX, sir, same question for you. What's catching your eye out there in the vol surface this week, sir?
As I mentioned, it's flattening a bit. October's just going to sit there. It will be interesting when we convene in exactly a week to see if there's any shift. If we're going to have the first event that may change that October, the Trump bump, Biden bump, which is the debates next. If I've got my dates right, and I'm like you on these goofy holiday weeks, I get them all mixed up. But I believe that the first debate is next Thursday, and that's the first thing that could maybe either increase or decrease the risk or give us some certainty. I think if Biden were to make a good showing, that's not what I expect, but I think if Biden were to make some sort of good showing, and it looked like he might be able to stay in there, that actually might result in a reduction in the volatility expectations for the fall. I'm not sure if a certainty that Trump looks like he's going to get it after the debate, or that he's ahead after the debate, if that's going to if that would have an impact. I think the only thing that would have an impact would really be and on the longer part of the term structure really would be Biden showing up and being a completely different person than a lot of us see these days.
Just taking it to him.
I'm trying to be polite. I really am. I'm trying to be polite.
Mr. Meatball, same question for you, sir. What's catching your eye out there in the vol surface this week?
Yeah, the spread between July and the cash seems really tight. And again, that October future, I think, is way overpriced. If I want to play the election, I'd be looking at, maybe December even, because December is trading under November and November is trading below October. So we actually have a weird backward curve in the middle of a contango, which is I don't know that I've seen that before.
A lot of weird, unprecedented stuff going on out there, listeners, including us taking a little bit of a foray now across the pond into the International Volatility Review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of EuroSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX.
All right, everyone, welcome to the International Volatility Review, the portion of the show where we go a little bit beyond these shores, see what's popping off in the international vol, particularly with VSTOXX. And last week, it was one of the more challenging weeks we had, at least for myself. I can't speak for everyone else, in terms of trying to nail down the target, the bullseye for this week on VSTOXX, because as you recall, listeners, we had that a little bit of election surprise kicking off overseas that drove a lot of upside in VSTOXX, nearly 7 handles to the upside. So then the question becomes, does that remain throughout this week? Does that start to fade? Do they add more? This was a very challenging week on the VSTOXX prediction front, at least speaking for myself. Coming into the start of the show, we have VSTOXX hanging out at a 1760. It was at a 1986 this time a week ago. So coming on about 2.25 points on the week. So coming off, but still remaining fairly frothy. Still remaining, obviously, is a chasm right now between VIX Cash and VSTOXX out there. So that is part of the challenge, part of the game is, will that juice remain? We'll reveal at the end of the show our prognostications from last week. See if anybody had a 17 and change handle in that. Remember, that's 52-week range, listeners. 23 1/3 to the upside, came close to Halloween of last year, and the low 12 in December of this year, even though we did kiss it again back in March earlier this year as well. So a lot going on. Russell, I know you were wrestling, as I was last week, with coming to grips with this premium out there in VSTOXX. We kind of mentioned on the show the challenges of that spread you had on at the time. I think short VSTOXX, long VIX. What's catching your eye out there this week? And are you surprised at either how much of the premium has remained or maybe how much came off, sir?
Well, we have all those goofy Wall Street sayings, and you often say that we have the whole the S&P 500 takes the elevator down and the stairs back up. And I've used that in reverse for volatility indices in the past. And we took the elevator up, and now we're just kind of taking the stairs down in VSTOXX. VSTOXX is a couple of points lower than where it was this time last week. The July future, which is now the front month July future, it's lost $2.90 or €2.90, I guess, if we're talking about Europe. But it's come in more than the spot index, and beyond that, we're inverted going all the way out to, July, August, and September are all at a discount to the spot. So at least the futures market is telling you that the expectation is that VSTOXX will continue to drift lower. That the initial reaction to far right candidates, which are very spooky apparently, having some success in different countries over in Europe. I guess that's going to be the end of the world for about 30 minutes. And then everybody realizes maybe it's not going to be as bad as we had expected. So my expectation, at least looking at the futures, is that, there's an expectation that we've still got some risk, but it's probably not going to be as bad as that first knee-jerk reaction indicated, which is pretty darn common when you're looking at volatility indices.
I like that. The end of the world for about 30 minutes. That does summarize.
And then we're over it.
That does summarize a lot of the vol trades we've seen over the years out here. Mike, I'm curious for you. Obviously, you're very much focused on the domestic vol front. I'm curious how much of your gaze peers overseas to the international vol markets and how big of a part they play in your analysis over there at Simplify.
So I actually have, done global macro for an extended period of time. So while I do focus primarily in the U.S. markets now, the international markets always remain an important component of it. You, of course, hit on the dynamics of what happened to the Eurostoxx volatility, the VSTOXX component. I think the more important story is, does the French CDS remain elevated, which is really what kind of powered this move. We've actually seen equity volatility relative to CDS compress quite dramatically. So this is much more a sovereign story than anything else. When we've seen trades like was just described, where you are, long the VIX, short VSTOXX, for example, or a very common trade was a number of years ago was long Hong Kong volatility, recycling it back into the U.S. in various forms. Those cross-country trades, the unwind of those basically just, tends to take out players that were actively supplying vol in one of two markets. In this case, it looks like people that were supplying vol into the European markets got damaged and are managing their way out of it. I think that probably does a good job of explaining a lot of the persistence that we're seeing there. If it fails to materialize into anything, then, it'll be the 30-minute end of the world. If it turns into a broader story, whether that's magnified by the potential for a recession in Europe, we saw some concerning economic data and survey data coming out of Europe in the past couple of days, as we have in the United States. The World Bank actually highlighted that they expected growth in Europe to actually be lower in this next decade than in the 2010s to 2020s, which is a pretty remarkable statement when you consider how poorly Europe did over that time period. I think that there are risks that the story is that the vol is inappropriately low as compared to inappropriately high.
A lot to unpack there as well. Speaking of unpacking things, Mr. Rhoads, I know a lot of our listeners want to know, A, have you unwound or changed at all your VIX versus VSTOXX trade? And B, any other trades catching your eye out there in VSTOXX this week?
It's really looking for, I'll answer your second question first. I really went looking for traders that came into the market and maybe on Monday and Tuesday and faded that move that we'd had in VSTOXX. And even though the futures have come in some, didn't really pick up on any gutsy looking, call sales, et cetera, which, I can understand not necessarily wanting to step in front of that freight train. So nothing trading wise that really caught my eye. There was a ton of paper, but it seems like it was more about maybe trying to catch the drop in August as opposed to looking at July as well, thinking that it might take a little bit longer for things to drift lower. And yes, I am still short VSTOXX and long VIX. That's where we're at this moment. About 250 in the hole on that one right now.
We will have to do some digging, see if we can uncover who traded those bullish risk reversals heading into those surprise European results, because they seem like they were on the right side of history heading into that trade. And if they unwound them for a profitable exit, it does seem interesting. Speaking of interesting paper, let's see if we can find anything out there in the big VIX mothership this week. Listeners, is VIX exploding? Is VIX putting up NVIDIA numbers? Well, no. Nothing's putting up NVIDIA numbers except NVIDIA. But VIX is having a respectable day out here on the heels of a, dare I say it, pretty respectable truncated holiday week. 552,000 contracts on the tape right now, so a little over 500,000. The ADV 838, so still ticking down a little bit, which is kind of interesting out there given all the paper we've been seeing out there. If you're wondering, is this the week the puts are going to overtake the top 10? The answer is no. Once again, we are back to 9-1 calls over puts. Let's see if you can find where our put is, listeners. Maybe you can guess ahead of time. Fun drinking game to do at home, as long as you're listening to the show, let's say after 5 p.m. Number 10 cost just 175,000 contracts to break into the top 10 in VIX this week. That gets us to the July 16, so all things considered, a fairly reasonable month and strike to kick us off. Number 9, $1.87 of the AUG 17, so still keeping things fairly reasonable. Number 8, here we go, listeners. Did you guess the number 8 spot? 202,000 of the AUG 15 puts, our first and only put in our top 10 yet again this week. 15 strike. I would not have guessed that. I would have guessed maybe a little bit more out of the money strike than that, but 15, that's where we're hanging out this week. On number 7, 207,000 of the July 19 calls. On number 6, here we go. Now we're getting to my old friends, 218,000 of the AUG 47 halves. If that's not doing it for you, allow me to present number 5, 220,000 of the D's 42 halves. This is their new 1x5 position they just put on recently, so they're moving it down a little bit, taking advantage of some of the drawdown in volatility to get a little bit lower strike there on the 5 leg. Number 4, 222,000 of the AUG 25s. Number 3, 274,000 of the July 15s. Dare I say it, the most reasonable of all the calls on the board here today. Number 2, 333,000 of the July 18s, and still holding down the top spot, 474,000 of the July 20 calls out there, listeners. Before we dive into all the action, though, it is time to unleash the beast. That is the once and future Dr. VIX, because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, the song's so nice, we are legally obligated to play it twice. Mr. Rhoads, sir, what caught your eye out there in the weekly side of VIX?
Side events, VIX, a lot of June 26th stuff going on. Monday with VIX at 1272. This is the strangest trade that I've ever seen. I have no clue what's going on here. Somebody bought 300 of the and these are all June 26th expirations. Somebody bought 300 of the 13 puts for 30 cents, bought 300 of the 12 puts for 4 cents, sold 150 of the 12.5 puts for 14 cents, and sold 150 of the 11.5 puts for 2 cents. Net result of all of that, if you say that, you know, we're selling 2 and buying 1, comes to basically almost scratch. It's the strangest freaking trade I've ever seen in my life. And really, I spent probably about 3 minutes trying to figure out what they're doing, and then I just said, I'm going to throw it out there, and I'm going to let the people in the chat figure out what the heck these people were thinking about doing.
This sounds like this one has Russell's seal of approval. This is your stamp of approval trade this week.
No, I've got one that I hate, and I always have, and I try to put one up that I like as well. But this one, I don't have one that I hate this week, but this is one that I just don't understand. And you can't hate what you don't understand.
It's a good philosophy for life, sir. I like that.
How's that? I'm just really philosophical today.
Yeah, I was going to say, I'm a little confused by that one as well. So if I heard you correctly, they're short the 13s and they're short the 11s. So effectively, this is a pure relative value trade with an 11 between 11 and 13. Is that effectively the net of the trade, as I heard it? Okay, so they're basically they bought 300, they sold less of the downside, so it's just a short vol trade.
Yeah.
Okay.
So yeah, I mean, I think it's just I don't quite understand the whole
it's very tight.
Selling the 12.5s and then buying more of the 12s. That's what I'm totally getting.
It's a very tight trade. It looks like it's a relative value, but yeah, I agree with you. It's a weird one. I mean, the payout structure looks like, you know, the Constellation Cassiopeia or something. Basically, just a weird wiggle.
Yeah, the way I kind of looked at this one was, why do those 150s if, you know, because this thing's not going to work unless they get down, you know, below 13. So
right.
why the heck wouldn't you just buy the 13s and sell the 12s?
Yeah, I agree with you.
Yeah,
that's weird. It's a strange trade.
But we also don't know what else they got going on.
It's possible they also don't have. They couldn't get size, right? I mean, it's possible, but at that far out, it's possible.
Yeah, that's especially in the weeklies for sure.
Yeah.
So, but that one, like I said, that one's a head scratcher. Somebody probably will solve it and send me a rude email going, "Come on, dude, get it together there." Couple of more real quick. Tuesday, VIX at 1249. Somebody came in and bought about 1,000 of the June 26, 25 calls for a nickel. You know, it doesn't cost a lot, but that's I just can't fathom that we're going to have our volatility event between now and then. And then I don't like that one very much. Again, June 26th options, these really were the ones that everybody's paying attention to. And this is a big trade. This is probably the biggest weekly trade I've ever reported on. Yesterday with VIX at 1319, somebody bought 10,000 of the June 26th 15 calls, paid 22 cents, and sold the 10,000 of the 22 calls for 3 cents. So they've paying 19 cents. And you know, if the market gets scared for one reason or another over the next few days, you know, maybe they can eke a profit out on this one.
You're right. That is some size in the weeklies. I don't think we've ever talked about the 15.
I was shocked
in the weeklies before. There you go. Yeah. See, we talk about them every week. We're just driving the flow out there, Mr. Rhoads. Let's get out here, see the rest of the flow that was lighting up our tape out here in VIX this week. Like we said, today a decently active day, but not explosive. 552,000 contracts on the tape. The big dog today, 90,000 exactly of the July 22s going up, followed by 88,000 of the SEP 15 puts, 29,000 for number 3. So we fall off a cliff there for number 3 of the SEP 17 calls. Number 4, 29,000 of the SEP 17 puts. That has the whiff of that funky synthetic versus upside again. I'll have to go dig in to see. And then number 5 today, we have 25,000 of the July 20 calls. Yesterday was obviously the banger day. Actually, Monday has something to say about that too, but yesterday was an impressive day. 1.17 million contracts. Now again, contrast that to NVIDIA, roughly 1/10 the paper. It was an explosive day for VIX. The big dog, and we talked about this yesterday on the option block with the Flowmaster, was this July 15, 18. It looked like a vertical at first blush, but we had the Flowmaster suss it out for us. It turns out it was a buying close of a stupid. So they were short, and then they bought both legs back. Kind of interesting stuff there. Not exactly what you normally expect size, we had 126,000 of the July 15, so number one, 107,000 of the July 18, so number two. So if you look and you see buying to close, it is not closing out a spread. It is closing out actually a stupid, listeners, which is funky. We couldn't really find the opening point. Looks like they kind of legged into it over time, but fascinating. You don't see size closing buys of stupids very often in VIX, but that's what we had for number one and number two yesterday. Number three, the SEP 20s, 100,000 of those. Number four, 80,000 of the AUG 12 puts. And number five, 65,000 of the July 13 halves. Wednesday, obviously no paper on the tape. Tuesday, 911,000 contracts. The big dog on Tuesday, 64,000 of the AUG 25s, followed by about 64,000 as well of the AUG 45s. So getting some vertical action there. Number three, 51,000 of the AUG 16s. Number four, 50,000 as well of the AUG 16 puts. So maybe our synthetic friend going up there as well. Number five, 45,000 of the SEP 45s. You know, those are all his strikes he likes to play on. So I have a feeling he might have been active there again as well. And Monday was the big dog of the week, 1.31 million. Banger start to the week, a truncated holiday week as well. The big dog, 100,000 exactly of the D's 42 halves, followed by 71,000 of the going away this week, obviously, June 12 half puts. Number three, 69,000 of the July 18s. Number four, 57,000 of the July 17s. And rounding out the top five on a pretty active Monday, 53,000 of the June, expiring this week, 13 half puts. Mike, you just talking about those weekly trades. It sounds like you pay a fair amount of attention to VIX options. We obviously just broke down a bunch of flow out there. Anything catching your eye on the VIX options front this week, sir?
I mean, I got to be honest with you. I think for the most part, you're seeing so much more demand for the S&P options inside of the weekly point that they're kind of dominating most of the information we're actually getting out of the VIX options. That's just a bias at this point. It feels like it's much more a delta play within the index and the NVDA than it is anything tied to the VIX itself. It does feel to me like the VIX is stagnating out there. So I'm paying less attention to it, although I obviously monitor it very closely.
Interesting. So you're in the big 0-day camp. I didn't get a chance to ask you. Sounds like you're a fan. We've been debating for a while the impact of all this 0-day flow on things like VIX. It sounds like you think that's starting to steal some of the thunder, sir.
Well, I think it's absolutely stolen the thunder. I mean, we see this in the quantity and the dollar value of both the trading and contracts that are happening against the reference price of the VIX, right? So trading 30 days out is an incredibly expensive proposition if you're trying to hedge against a single economic report or a Fed meeting or a CPI release, et cetera. And we're just seeing more and more volume that's effectively moving to this will be an endogenous, an exogenous single shock. And once that's over, everything goes back to normal. And that has been the right trade. Now, the irony, of course, is how much of that is being created by the growing volume in the 0-day to expiries. Is it self-fulfilling until, like an XIV type framework, it blows up and then we encounter a totally new regime. But for right now, it does feel that the VIX is basically, the redheaded stepchild.
Interesting stuff out there. Mr. Meatball, same question for you, sir. Obviously a truncated holiday week, but a lot of flow nonetheless. What was catching your eye out there this week, sir?
Yeah, big put sale today. SEP 15s. A lot of volume on Thursday. We saw the July 18s going up versus the July 15s and 13s. Looks like that was a call spread with a put sale. Pretty decent size there. On obviously we didn't have work on Wednesday. Tuesday, big August 25, 45 call spread going up. And they did the it looks like they outright bought 45,000 of the SEP 45s. I'm not seeing anything going along with that trade from Tuesday, and some other decent action. There's some call buying this week, and some put selling. You don't have a lot. Not seeing copious amounts of put buys. And then, Monday we had that 1x5 go up, which is, everyone's favorite trade.
Everyone's favorite trade of all time. We got some favorite trades to get to in the vol ETPs. Let's keep on rolling. let's get out to SVIX. I'm guessing Michael has a thing or two to say about SVIX, being an old XIV guy. SVIX coming into the start of the show, 46.5, so almost literally unched on the week, which is kind of interesting. You don't see SVIX treading water very often out there, giving up about a tenth of that point now during the show. It's about a 46.40 right now, so off about a tenth of a point. Doing decent paper out there, 5,100 today. The ADV is 4,400. That's up 200 from this time last week, so slowly moving in the right direction. But Mike, I have to ask you, you're a former XIV guy. We've talked about XIV a lot on this show. We talked about Volmageddon and the death of XIV quite a bit. Now, SVIX, a very contentious product when it relaunched a few years ago. Where do you fall on SVIX as a former XIV guy? You a fan? You not a fan? You trade it? You watch it? You think it's never should have come back? Should have been burned with fire? What do you think?
So just to be very clear, I have a competing product. SVOL is the simplified variant of that. We have detuned it. So my primary complaint against XIV or the old SVXY and now the current SVIX is it's simply too volatile of a product. Ultimately, you're going to experience significant drag in a higher vol environment. But it's a brilliant product for recreating periods like 2017, which is what we largely seem to be experiencing. The bigger thing I would just highlight is it's just too small to matter, right? It doesn't have options outstanding on it like SVXY does. It's a couple $100 million in market cap. It's a fraction of the size of the vol complex in its totality. And so people get hyperventilating about the idea that this is the return of XIV. Talk to me when it's $2 billion, right? At 200 million, I'm just not that worried about it yet.
There was a lot of hand wringing. It hasn't really materialized on the volume front yet. Growing, but for the amount of Sturm und Drang that surrounded this thing around its launch, you would have expected a lot more out there today. The big dog position right now, listeners, we have the 47.5 puts, 3,300 of those, and 2,300 of the 47 puts, all going the way of the dodo today. In fact, most of the top 5 is going the way of the dodo today, so we'll have a very different looking SVIX coming into next week. But Mr. Rhoads, you requested that I get to UVIX, so let's get some time for that now here on the show. UVIX was at about a 6 even when we kicked off the show as well, which put it at literally unched, which again, a rare feat for UVIX, down about a tenth of a point right now, down to about 590 as the show has progressed. 18,000 contracts on the tape already, so that's nothing to sneeze at, especially when the ADV is about 19,000. That in and of itself is up about 1,000 week on week. You made some headlines on VolTwit last week, Mr. Rhoads, when you said on the show that you were putting some UVIX in your back pocket for a rainy weekend. How did that unfold? And I hear little birdies told me you may have uncovered some secrets about UVIX you want to share with the universe.
Necessarily secrets. Well, first off, I bought a whopping 1,000 shares of UVIX for $5.93 and sold it for $6. So basically, I bought it in the afternoon as we were last week as we were finishing up the program. Just kind of like out of curiosity, just to see if it would hold up if we didn't have anything happen over the weekend. And that led me to breaking out. I'm old, so I program with Visual Basic and Microsoft Excel. I know a lot of people just spit milk out their nose when they heard me say that. But I ran weekly numbers on UVIX, and it turns out if it's been around since April of 2022, and I know that 2022 is a pretty volatile year. But if you consistently bought it on the close on Friday and sold it on the open on Monday, you actually would have a profit being nothing but long UVIX. Not a giant profit. What I did was I just looked at if you bought $1,000 worth of shares, because with all the goofy splits and stuff, it becomes a bit difficult. You got to use percent changes. And if you bought $1,000 worth and bought them and sold them on a consistent basis ever since the launch, you'd have made about $350. So it's not a ton of money, but it just shows that UVIX it's more like trading an option than trading an individual security. And if it's got that optionality to the upside. So just a long position over the weekend, and I came up with that. And then what I want to do is I actually want to say, all right, what if we combine that with consistently holding SVIX? How you doing with that? And does everything kind of smooth out with that? That's something that I haven't gotten to yet. And then finally, you met, and I'm not throwing you under the bus, Mark, I swear. But you did ask, why didn't I just buy some call options instead of buying the spot UVIX? I actually, if you had tried to buy the call options that expired the following Friday, you actually would have lost money when you tried to get out of them on the open because of the bid-ask spread and some of the time decay, et cetera. So I just did it because the price of the freaking fund is so low. It's just like trading an option. But I did track, because you had asked why I didn't. And if it looks like the option would have worked the same or better, I'd probably be eating crow right now and going, you know what, you had a good suggestion and maybe I should have done that. But those are the tidbits related to UVIX that I was so excited about this afternoon.
Long little underlying in your back pocket.
Lots of little stuff.
Yeah, over the weekend. Intriguing. So if you need a little weekend risk protection, listeners, maybe the underlying in UVIX is the way to go. At least you could probably scratch it on the open. At least we know that much. But now it's time to keep on rolling, listeners, into the most difficult, the most dangerous portion of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's come to grips with it now. It was a challenging one last week, especially on the VSTOXX front. VSTOXX coming in at 1760. Right as we came into this segment, VIX cash was at about a 13.25. Let's see, going down the list here, I was at a 1735, so I was actually surprisingly close on VSTOXX. I'm amazed at that because I was kind of throwing a dart last week when it came to VSTOXX, listeners. VIX, I was looking pretty good there as well, 1335 bullseye for those 13.25. That puts us exactly within our 10th of a point margin of victory, so I will take that because victories in this game are few and far between. Mr. Meatball doing his palindromic nonsense at 15.15. And VSTOXX at 20.02, so no joy for him. Mr. Rhoads, 14.13 on VIX, so about almost a point off. And VSTOXX, 19.18. And then we had Rich Excel on the show with us last week, and he was at 12.98, so he was looking pretty close as well. Maybe if we waited a little longer, he would line up pretty well with his pick. And VSTOXX, 17.98, so not looking bad for him this week as well. So Bullseye, I get to choose where I go. I'm going to go last. I'll give our guest, Mike, the dubious, actually no, but let's take that back because I know Mr. Meatball, you've got some stuff popping off. So let's go to you first out there, Mr. Meatball. Give us your prognostications for the week, and then where can folks go to learn more about all things Pitt?
1331 and 1551.
Ah, yes. The palindromic fun continues. And then where can folks go if they want a little bit of Option Pit you in their lives?
Yeah, just tweet at me at Option Pit, and I'll be happy to tweet back at you at Option Pit.
There you go. Maybe join us in town next month for a fun volatility smorgasbord over there.
Yes,
at the
it's
Option
gonna be awesome.
Pit
Join us in
event.
Chicago. You've got the link, Mark. You can put it out to people if they want to join us. Give my team a call, 888-872-3301, and they'll be happy to give you the Option Insider discount. Just give them a call.
Thank you for that. Let's go out to Mike. Hopefully they prepared you for this one, Mike. But we'll need a prognostication. I'll tell you what, I'll be kind. If you just want to do VIX, that's fine. Or if you're feeling daring, you want to give us both VIX and VSTOXX, have at it, sir. Your choice.
No, I think ultimately the convergence trade is probably likely to play out. So if I'm placing a bet, I'm going to go on 14 on the VIX. Let's make it a nice round number, and probably 15.5 on the VSTOXX.
Interesting. Good numbers, a good range, good tight range for your first go here on the show. Mr. Rhoads, you know the dance, sir. What are you feeling this time next week for VIX and VSTOXX?
I'm going 1290 on VIX. I have this funny feeling that we're gonna, I always give all my reasonings and they're never right, so I'm just gonna say 12.
Give your reasoning, sir.
Oh well, the week after that is we got another goofy holiday in the middle of the week. That's really why I was just thinking a little bit lower on VIX, and then VSTOXX. I'm gonna say a 1623.
Oh. By the way, speaking of reasoning,
Still drifting lower, but you know.
Speaking of reasonings, it doesn't seem like our chat is buying your debate as a vol driver next week. They're not feeling it, sir. So I don't know. Maybe take it up with them. They are taking issue with your debate vol driver point. So Your vitriol can be aimed towards our chat, sir. I am blameless. I'm just a messenger. All right, and then let's get out of here with mine here. Let's go. Last week, good week for me this week. Let's see if I can keep it up. I've had a couple bullseyes of late. I'm putting the pressure on now. This is another one. Are we going to see this vol erosion or another couple of events towards the end of the week where we get some weird, to coin a technical term, poppage out there in VIX? I'm going to say, not a lot going on. I'm going to say probably a little bit of erosion. I'll give Mr. Rhoads some wiggle room, so I'll go down to a 1275. Give him some breathing room at his 1290. And then VSTOXX, again, this is the challenge, listeners. If you nail down a model to do this properly, by all means, hit me up here. But yeah, this premium, how much of it is still going to remain this time next week? What is that spread going to be like this time next week? I'm going to say VSTOXX this time next week. I'm going to still call it at about a little over 4 points. I'm going to say, actually a little under 4 points. I'm going to say 1655 for VSTOXX. All right, listeners, that music means we have come to the end of another epic journey through the world of volatility. Mike, you did an able job holding down the guest seat for your first time, sir. If folks are intrigued, you mentioned you have some alternative products out there. If they want to learn more about your products, where should they go? What should they do?
Well, the primary place to find me is at Simplify's website, www.simplify.us. We have products like SVOL, which is a competitor to SVIX, it's been detuned to the point that we think it's actually appropriate for the use within equity-centric portfolios. The second business that I'm involved with is Tier 1 Alpha, which is an option-based daily newsletter that goes out to the retail community. It's distributed by Hedgeye. And then you can always find me on Twitter at ProfPlum99.
There you go, listeners. Give him a follow. Check out his product out there. If maybe you're one of the many who hasn't been lured to the dark side of SVIX, maybe this one will bring you into the party. Check them out over there, listeners. You can give him a follow on many places, as mentioned, including on Twitter at Simplify, ASSTMGT. A little bit of abbreviation work going there, all one word on the old Twitters. And Mr. Rhoads, if folks want to check out all of your cool data and analysis and trades over there on all things VSTOXX, where should they go? What should they do?
Oh, just follow me on Twitter. Anything I do, I put up on Twitter. It's my full name. I do a weekend review of what's going on in the volatility space. Also, I wrote up a really nice block trade in NDX that I'll be linking to as soon as it gets published a little bit later today. So that's how you find me. Or I'm always here every week now.
Yes, you can find him on this show this week as well, and every week, listeners. And if you want more VSTOXX in your life, Eurex.com, EUREX.com, the place to go. Kick the tires and light the fires on all the data, all the trades, or just go to stocks.com. That also gets you there, STOXX.com. Both of you get you right into all things VSTOXX. With these days, everything popping off on the European front, some intriguing things to check out. If you're on the on-demand side, that will conclude your broadcast week with us. I hope you had a good truncated holiday week. Remember, if you missed anything, it's all waiting for you over there on the on-demand side of the network. If you're hanging out in the pro, hang out. We'll be back in a little bit with the Rock Lobster to break down a week's worth of unusual activity. And there's a lot. Should be a fun one coming up in a little bit if you want to get access to that and all the 300 other plus episodes we have popping off over there. On the pro side, only one place to go, theoptionsinsider.com/pro. Of course, we'll see you back here on Monday for the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.